You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koch, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right, everyone. I'm here with Andy Mills, President and Commercial Realtor at Elford Realty, and we're going to be talking about the coronavirus through the lens of commercial real estate. Before we get started, as always, a few housekeeping items here. If this is your first time listening or watching, then thanks for joining us. The Cash Podcast is produced weekly, and as stated in the intro, Cash stands for creating affluence, success, and happiness. And that's our mission. My hope is for you to learn a little bit more on each and every episode so that you become more successful, wealthier, happier, and more educated than you were before you started listening today. So come back often. Feel free to subscribe on iTunes and YouTube. In addition, you can also follow me on Twitter at Adam Koch and on Instagram, where you can look up my username, which is at Financial Surgeon. Last but not least, all links, visuals, charts, and other educational resources are on our website. So that's it with all the formalities. So let's go ahead and get started here. All right. So just to give you all of our viewers and listeners here a quick introduction to Andy Mills. He is an amazing, and this is coming from me, top-notch, hardworking commercial realtor. He's going to laugh. I don't care. And I'm not just saying this for the sake of the show. I know from firsthand experience. But he is the president of the Columbus Realtors, a board member of Ohio Realtors and the National Association of Realtors. He's an adjunct professor at the Fisher School of Business, The Ohio State University. He's also a recipient of the Columbus Business First 40 Under 40, was ranked by the Business Journals this past year in the nation's top 100 influencers in commercial real estate. He's been honored by the Columbus Board of Realtors, winning their 10 Under 40 award. He's been ranked a top 10 commercial realtor producer by Columbus Realtors, and was also recognized for the largest retail sales transaction. And Andy has held the Certified Commercial Investment Member, or CCIM, designation for more than a decade now. And if that's not enough, he was recognized by the CCIM Institute with the Presidential Distinction Award under his leadership as president of the Ohio chapter. So now I know you're also a proud husband and dad as well. But with that all said, you probably have tons of free time and, find yourself bored a lot, I assume.
For sure. So,
I'm being sarcastic, obviously.
Just like you.
Oh, yeah, right. Seriously. But yeah, in all seriousness, it sounds like you might know a thing or two about commercial real estate, and that's why I obviously reached out and invited you onto the show here. So I really do appreciate you taking the time out of your busy schedule and to share your thoughts with our listeners.
You bet. Thanks for having me on.
For sure. So I think it goes without saying that you have a pretty unique perspective, and that most people have been focused on the coronavirus itself, not so much the economic shockwave that will likely result from the initial COVID-19 impact. However, what I've been interested in is learning more about what's next, or in other words, what's happening behind the scenes with businesses. And I think commercial real estate has a lot to do with it. Don't you think?
I think it definitely does, because obviously on our end, on the commercial real estate side, it's dealing with businesses, and that's the lifeline to our economy. So I think what makes this unique is, it's not one specific sector like the financial crisis that we had in end of 08, 09. This is truly something that's having an impact on every business and every client that we have.
Right. Now, do you obviously, the real estate market's not the stock market. I deal with the stock market here in the U.S., overseas, the bond market, commodities, currencies, and so on. But real estate's slower moving. And if we dig deeper, obviously, commercial real estate's different from residential. So how would you describe the differences specifically between, say, commercial and residential real estate in the way you see it?
Sure. I think there's the timing component is the most obvious. The time for a transaction in a residential purchase can be as quickly as 30 to 60 days. Obviously in a hot market like we've had in Columbus, it's been very active, and that varies based on different price points. On the commercial side, you know this from your recent acquisition, or even by doing previous leases. That leeway ahead of time can be anywhere from somebody's out 6 months prior to their lease expiration, right, all the way to 18 months or 2 years.
Right.
Especially if they're looking to build in your circumstance, where there was a situation obviously involving a special servicer and a receiver. with a previous default of a borrower, I think you patiently waited upwards of a year with a contract term, and that didn't include the ramp up to that. So I think time, for the most part. I would also say that on the commercial side, you kind of lack emotion. The residential side has an emotional component. You're gonna, it's probably the biggest single purchase that any person makes in a home. On the commercial side, obviously it's related to your business, but it's really more black and white, right? It either works for your business or it doesn't, and it usually comes down to the financial, side of that, and really does the space or the building work for you.
That's interesting. I didn't think about the emotional differences. So that's a good point. Do you foresee, certain sectors within the market, different types of properties being hit harder or less as a result of the virus?
Yeah, I think it's interesting because you can, when you look at commercial real estate, the sectors that exist out there really are, you've got office, you've got retail, you've got, even within office, you've got medical, right? You've got multifamily, which is on the apartment side, you've got hotel, and you've got industrial. So I think, when you start looking at each of those, and maybe I'll just hit, there's obviously lots of different, articles swirling out there of what the true impact is. But, I think that the two segments that are going to see the biggest impact are retail and also hotels. If people aren't traveling, businesses now are finding Zoom meetings to be fairly effective. And you talk to certain companies, and I've got clients that have 100 salespeople that, their budget for those salespeople to travel every year is hundreds of thousands of dollars,
right?
Sometimes pushing even more than that into seven figures for some of these companies. And their salespeople have been able to be equally as productive via Zoom meetings without hitting the road. And so
that's a good point.
Those types of things, when you look at that, so not only from a travel perspective of how comfortable is the consumer to get back into the habits they had before, which is personal and business travel, but what's the business side of travel going to look like? And so when you look at that, the hotel industry to me is the one that is the most staggering, predictions and projections where, there are reports out there that say 50+% of hotels could be in foreclosure by the end of the summer.
Wow.
Again, I think it's hard to throw any statistics out there until we actually see what happens.
Sure.
But on the retail side, there are different reports from, 20% to 30 or 40% of restaurants small retailers won't be able to survive this. And you and I were talking beforehand, but pending how states open up and what those requirements are, if you're required and mandated to wear a mask and restaurants are allowed to open, our restaurant clients are sitting there saying, like, are customers and consumers really going to come in to eat and drink with a mask on? And so right. Those are the unknowns. But retail in general was struggling to some degree because of e-commerce. And because of that, I would say the one segment within the commercial market that has not necessarily seen the impact that the other segments have seen is industrial.
Okay. I was wondering.
You look at the online purchasing, and obviously grocery is its own unique anomaly within retail, but even that, people are ordering online groceries to be delivered. So, the industrial market in Columbus was very hot to begin with. The industrial brokers that I continue to talk to in the market say, a lot of their clients have hit pause on some things, but there's still really good activity out there. On the office side, the reality is a lot of people have just kind of paused their searches and they're reevaluating things. Like the trend in office was fewer people per square foot. So we want this interactive open office concept. We don't want people separated in your private offices. So we were seeing just cube farms of people sitting next to each other, great open kitchens and, places for people to collaborate and do a lot of team building. And the rumors and the questions that are out there are, will we go back to that, right? Or will people tend to go back to a closed office? Or will people say, you know what, we're going to have most of our staff work from home 3 days a week, and when there's team meetings, they can come into the office, so the office is used really still as a team bonding side, but not essential for everyone to be there. So those things are still unknown and to be determined. And then lastly, on the multifamily side, there continues to still be great activity in Columbus's market for multifamily. There's a ton of new construction, and our company manages.
You see it driving around even, just they're still building, you know?
Yeah, and we manage apartments, and I think we were pleasantly surprised at the number of tenants that were paying April's rent. But what I think we're all cognizant of with our owners as well is, you know, March had half the month where people were normal and could work. Right. And so the real way to look at that data will be in May. A lot of people were on automatic payments. Obviously, you know, the governor's come out and said, you know, landlords, please provide 90-day deferrals to people that request them. And you can go to your lender essentially and ask for 90 days forbearance. But, you know, we have owners in the market that may not have debt. So
when you say that, are you talking about the landlords then? So the landlords can go to their...
the owners of multifamily properties, the landlords of those properties then, you know, are encouraged to go work with the tenants that, you know, may have lost their job, may have been furloughed, you know, just are in a bind here because of the current situation. So again, on that side, there's definitely been an impact. The question really will be, you know, how much is that side of the market impacted as we come out of this? You know, and you look at the staggering numbers for unemployment, and obviously if people don't have jobs, like their ability to go pay probably comes into question. But, you know, the multifamily is one side. I also think, you know, people also have to have a place to live, right? So
for sure. Yeah,
that obviously is a priority. So personally, I feel less concerned about that side of it than some of the other segments.
Okay.
Long-winded answer to your question, but
no, that's a perfect answer. I was actually going to ask you to go into each sector. So you already did that. So it sounds to me in summary that the retail was already trending downward as it was. It's like being kicked while it's down. And then, you know, industrial is kind of on the other end of the spectrum, maybe, you know, with all the online shopping, that more industrial space might be needed. And then hospitality, office and multifamily maybe is kind of somewhere in the middle of that bell curve.
Yeah, I mean, retail was extremely active prior. There were tons of new restaurants, tons of new mom and pop, you know, entrepreneurial shops popping up. I think retail has been changing for a while, right? Because of the e-commerce side of things. So I don't think people argue that retail doesn't need storefront presence, but they don't need storefront presence like the Sears that were 120 to 200,000 square feet, right? And so the mall concept itself has been reinventing itself really into lifestyle communities that we saw really with Easton setting the way, you know, in the late 90s, early 2000s with that kind of test, and other markets have done that too. The real question, as we continue to see with, you know, the malls in our market, is what are those big anchors actually going to become?
That's interesting. What about in terms of, you know, you kind of alluded to this a second ago, but challenges that landlords are seeing and how they're dealing with similar but maybe different challenges that tenants are facing? I mean, are there things that you mentioned, things that landlords can do with their lenders, but what about the tenants? I mean, is there any I guess, reprieve there?
Yeah, I mean, I think when you look at kind of the options that are out there right now, if I'm just trying to take an unbiased perspective, and obviously we're working with tenants and landlords, so we see both sides of that in those conversations. But, you know, tenants in theory have probably been afforded more as far as leniency, which is, you know, you can work with your current owners, defer your rent payments for up to 90 days with no penalty. And really that only leaves the landlord with the option of going to their lender to say, you know, can you work with me? And, you know, I have clients that have 70 to 90% of their tenants not paying right now. I mean,
wow.
You still have mortgage payments due, you still have tax payments due. And in a lot of those cases, they're still requesting that the tenants pay their pro rata share of CAM taxes and insurance. But there are other situations where those tenants say, I can't pay anything. So that puts a landlord in a bind. And I'm sure you've seen stuff too, where Franklin County at least has extended the due date for first half taxes. So, this has a trickle down effect. I think the one thing I was telling you before we jumped on the call is that the real question really becomes, as some of these tenants who need relief, right? Maybe they were deemed non-essential businesses, so they're not open, they're deemed essential, but their sales are significantly down, so they need rent relief in the meantime to get through. The question just becomes, pending how long this lasts, pending what restrictions continue in the market to allow a business to operate in a safe manner, and more importantly, pending how do consumers respond? What is the end consumer behavior? Right. And how long does it take for that consumer behavior either to go back to normal or to understand how it's adjusted, and what is the end impact on that retailer, that restaurant, that business? The challenge is going to be in that 90-day grace period, essentially, that everyone's talked about providing. If businesses just go under, then, and they have lease term remaining, then landlords are going to be in a world of hurt, because it's probably not that realistic that we're going to have this huge influx of new businesses all of a sudden looking for new spaces. So now you have lease terms that really are in default with a tenant that really doesn't have any money to go after or pay anyway. So to me, on that side, I think, it's hard to predict. It looks like mud, right? Although it seems like there's definitely going to be some larger issues on the landlord side down the road, pending how long this all lasts, what the acclimation back into a new normal is like, and what those mandates are, what funds are available to landlords and tenants as tools and mechanisms to kind of be able to keep the lights on and pay the bills.
I mean, I remember I called you a few weeks ago and we were talking about how my commercial tenant, asked for that 90-day, forgiveness, if you will. And I granted it immediately and kind of thought, okay, we'll be okay. Our business is doing pretty well. So I guess I understand a little tiny piece of the commercial side, but what about multifamily? I mean, are they being offered the same types of, options, I guess? Rental units and so on? I think
upon request, right? So like you have plenty of tenants communicating. The hard thing for multifamily and apartment owners is really to, for those that don't tell them and they just choose not to pay. That's the stuff that's hard to predict. And those people still have expenses. They still have property managers. They still have maintenance personnel, that are obviously out there maintaining properties. But in most situations, I would say tenants are communicating with their property manager, explaining their current situation, saying, here's what I need help with. And I don't know that there are tenants per se that say, I just can't pay for 90 days. They basically say, I'll keep you in the loop. And a lot of the tenants are really just communicating on a month-by-month basis for sure. So,
that's interesting.
It is impacting that side. The landlord's only option right now, pending how many of those tenants are requesting that relief, their only option really is to go to their lender and ask for, a forbearance of that, which is, it's basically punting the ball down the field, not necessarily saying you don't owe that money ever.
Right. It's not forgiven. It's just delayed. Yeah. Okay.
And
there's a lot of, sorry, go ahead.
Yeah, I think that's what's been surprising to me, Adam, is that you look at so many of these landlords and tenants, and never before, at least in my 15-year real estate career, have I seen such collaboration and willingness to work with each other. And that's from the tenant side, the landlord side, and the owner side. And everybody kind of just says, we're all in this together. Like, nobody in theory created this problem. We all just kind of have to figure out how to deal with it. And so I don't know that anybody has the full answers, but it seems like, at least in the short run, people have been very willing to try to, adapt, accommodate, and see how it plays out. So
yeah, it feels that way. It really does feel like
Yep.
There's no battles going on, under
Yeah.
this behind the scenes when it comes to the relationships between. The only big question I have was about multifamily. So that's really interesting too, and it's actually really encouraging. It kind of makes you think positively about humanity, to see
Yeah.
that happening. But
Yeah, and the caveat to clarify on that, I think it probably depends the price point of that multifamily, right? Just like anything else. So if you have more stable income jobs that are renting from you, then you're in a different position. For
Sure.
those that are in the service industry,
Yeah.
that are the hourly wage workers, that most of them have been furloughed
Right.
or laid off. Those property owners probably see a much different situation. So again, my perspective is probably a little skewed because a lot of our stuff on the multifamily side is newer products. So, but we definitely have tenancy that also have lost their jobs. They work in those industries as well. They have, roommate situations. So I think, everybody's
Right.
feeling it to different extremes, but I think it really is determined based on maybe a little bit of luck of the draw too, of what industry segments people are in that are renting from you.
Right. Back to that old adage, location, 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 right?
Yeah. And unfortunately in this situation, it's, those that are non-essential businesses that aren't able to go generate income. That's just, that's hard
Right.
to try to continue at that pace. So a lot of those people have been, furloughed, or their hours have been cut back in order to try to just get through this.
Right. Yeah. So you mentioned something earlier about the commercial office space specifically. There's a lot of buzz, about this unprecedented quarantining we've been talking about, and how customer and employer behaviors could change, resulting in maybe longer term effects where companies decide to have more employees work from home, and perhaps as a result require less office space. You mentioned, different options, was a couple I hadn't even thought of. You mentioned that going back to the old way would be one, but another one being, 3 days at the or 3 days at home, meeting days at the office, things like that. Maybe people working every other day at the office and every other day at home, perhaps. What is your thought on that? I mean, that opinion, because it's kind of a broad opinion that I'm hearing a lot.
Yeah, I mean, I think it's hard to say because it's so dependent on individual company and culture and how you work, right? So
Sure.
and your own unique situation at home. Like I was telling you, my wife works from home normally, so some would argue that like her change has not been impacted, and she would argue her change, there's a huge change, right? Her husband and her 2-year-old now are at home every day. So
Right.
and I would tell you that like I find that we actually probably are both more stressed because we balance, having, conference calls. So she's, as you probably can hear him jumping up and down upstairs while I'm on this, like, we alternate conference calls, but what that usually means is that once we get him down at 7:30, we're both on our computers and working until about 11 o'clock at night every night. So
it's tough.
I think for both of us, we actually feel like we have less time. We both are busy still, and a lot of my work right now is really helping people kind of plan for when we come out of this, or help them with strategies of how they can accommodate their own unique situation. So I really think your office question is going to go back to, for me, I can't imagine only working distributed. I want to go back to an office. I miss the collaboration with a team setting. With that said, like, I don't think my team will be the first team to go back to the office once the order is lifted. I think we'll take a gradual approach back, because I don't think any of my team want to sit in the office with a mask all day either, if that's what's going to be required. So
Sure.
Again, we'll see. But different companies who have the need to physically be there will be back in the office. Those that say, wow, we really can save a lot of money and don't need that expense, I think we'll definitely see changes. Is that in specific market sectors like technology versus medical? I don't know. You would assume medical is going to continue to still probably be a face-to-face, and technology probably could be more distributed, but we'll kind of see how those trends continue.
And I mean, this just in this discussion alone obviously goes without saying that this is causing and will cause probably a huge disruption in the economy as a whole. But regarding, against commercial real estate specifically, and I know this is probably impossible to answer, but how long do you think this disruption will or could last? See, you're starting to smile already.
I was gonna do what most do to me, which is answer a question with a question. So
there we go.
I was gonna say to you, with my limited knowledge of the stock market, and you look at past, downturns, right? Like the stock market is doing the exact opposite of what you think it should be doing right now.
Yeah.
Right. Well, if you look at kind of
day to day.
Yeah,
weird.
Well, I haven't looked today, but you look at it and say, and I read an interesting article in the Wall Street Journal that basically said, with the rally of the stock market last week to come back, that basically typically it's about 5 months from a recovery, which would be like August or September.
Mm-hmm.
And I'm looking at it going, sometime in the fall, and I'm looking at it going, wow. And then I continue reading, and he ends the article by saying something to the effect of, boy, there's a lot of stuff that has to go right in order for that to happen. I
always love the Mark Twain quote that, that history doesn't repeat itself, but it sure does rhyme. So I don't think this time's going to be like last time, like 2008. I don't think it's going to be like 2002 or 87 or, 73, 74. I think it'll be different, but I think it'll be similar. I think that but it's going to take months. I don't think this is going to be something that roars back, I don't know. I just can't imagine.
Me either. And I'm an optimist. So
for sure.
I would say that, if we can get back to some new normal here, gradually, without, not being in the same situation that we're in all summer. If this continues to go all summer, obviously if there's a second outbreak, there's a lot of these unknowns out there.
Oh, for sure.
If people can gradually get back, I think if testing can be put in place, obviously, if there's a vaccine or way to give people some more peace of mind as well, for those that think that's a good option, all of those things impact how quickly we recover. But I would say most of the research from folks in the commercial side are still kind of hopeful that the market will start to recover again in the beginning of next year, right?
Okay.
And that, we'll struggle here to figure it out, but that the fall is going to be a telling time of what the true impacts are. And like I told you, data on the residential side is typically put out monthly. Data on the commercial side is typically put out, quarterly and lags a quarter. So the first quarter of this year from a commercial side in Columbus, I anticipate to be a very active and good report. I would call that very deceiving to what the market is doing. Most likely would be my gut feel, when the second quarter results come out, because a lot of people have just hit the pause button, right? Until there's more clarity.
Everybody's frozen. And I think it really does come down to that, what that new normal looks like, and then how people react to that new normal.
Yep.
But what about things that a property owner should do to help soften the blow? You've kind of alluded to some of it already, but I know that the PPP loan, the first round was out, applied for, done in 3 days, something like that. And then there's talk about a second round of stimulus for small business owners, another one for big businesses.
Sure.
But commercial real estate wise, what's out there? What should people be doing if they own property?
Yeah. So one, communicate, right?
Okay.
There's no better time than to make sure. And if you have a property management company in place, I just, really make sure you're communicating with them and making sure they're communicating. But in most situations, even for the people that we work with on the management side, the owners have taken kind of the bull by the horns and said, I want to communicate with my tenants now. So lots of conference calls, but really just candid conversations. And to me, I think, like most of life, communication always, good communication and clear communication and candid communication always leads to better outcomes. And so we've had some really interesting conversations with, we have an office owner right now with a tenant that is just in a really tough predicament and most likely will not make it out of this scenario. And,
oh man.
And they have another business. Well, their other business is in a sector that's just getting obliterated, and his projected income is down, call it 80 or 90%.
Wow.
So it's just an all-out bad situation. And we got on a conference call, and the owner was pretty candid on their current situation with their lender. The tenant then just kind of spills their guts and says, here's my situation. And it was just a really productive outcome, like the best that it could be for either. And the landlord is going to take a hit. They had a long-term left on the lease. There's an option to get it there, but there was agreement and things that I've never seen before to get to a solution, because of the fact that there was a side of empathy that came into it, which is like, how could you ever predict, right? Like, I don't think when you did a business plan, or I did a business plan, you predict a pandemic is going to hit, and we're going to be on complete shutdown. So, I think communication is key. The other thing I just mentioned is that a lot of landlords are getting pretty creative and flexible, and that they're saying, hey, we'll give you this, X number of day deferral of your rent payment. And sometimes that's full rent. Most of the time it's just your base rent, so that they still continue to pay operating expenses. For businesses that are shut down completely, they tend to request full rent deferrals, which obviously has an impact on the property owner. But what property owners are putting in some of these amendments is essentially, if you get a PPP loan, right, and you get money, then the repayment of that, deferred rent is expedited in theory. And obviously there are criteria around the PPE loans of spending that money, in which
payroll.
I think landlords are savvy enough to understand those incentives. If tenants don't get those PPP loans, then they're offering longer repayment terms. So
got it.
Which again has an impact on the landlord. It's what I told you. It's an amazing sign of people's willingness to try to just work together for something. And
goes back to that harmony. Are you willing to share kind of what was unique about the agreement that company came to without using names?
I think there are some other income opportunities that could be produced for the landlord that are based off of this. And so it's a mutual, instead of just saying, here's the keys, I'm done, right? It's, here are some things I can do to mitigate the loss that I'm going to cause you.
Got it. Okay. And we'll just call this.
That doesn't normally happen, Adam. Normally people are just like, see ya.
Sure. Again, and it's going back to that yin and yang, that harmony between landlord and tenant. But I think that what I'll just say then is, maybe if people are in dire straits and if there are big issues, call Andy Mills and he'll help you out with his creative information and strategies at helping things, making things work out. But
I think that's where people have been great of, there's a lot of conversations of, hey, what are people doing in this circumstance and that circumstance? I think, there's creative ideas out there, and again, a willingness to work. There's always those tenants and landlords that can find a way for harmony, but I've yet to run into any of those, at least with our clients.
That's good. That's great news. What are your thoughts on those who just literally 2 months ago wanted to sell their commercial property, but now here we are facing a completely different landscape? What advice would you give them?
Well, this is a common occurrence for a couple properties, and I think it depends what the property type is. For some of our properties that we have that are investment, those are tougher plays right now, right? Because pending whether their tenants are essential or non-essential, pending whether they're paying rents. So some of those people have just asked for more time in a due diligence process. Amazingly, we've listed, and hopefully later today we'll go into contract on a building.
No way. Okay.
So it's in Grandview. We had multiple offers. We had multiple showings that were requested, and the owners were pretty hesitant to put it on the market. But there are certain niche markets and certain niche product types that there's just not a lot of opportunity. And so Grandview is one of those markets. There are kind of niche things for owner occupant opportunities. And so financing is still really aggressive. You can still get really low interest rates and attractive debt. And so there's definitely still people that believe that they're going to come out of this okay. And I think it's just really a on a case-by-case situation to evaluate, but what I tell people is like, and I think others in the business would agree, is that a lot of people, the majority, are kind of on hold. There's a handful of people that really are worried about their business being able to survive long term, and so you're trying to work with those, but there's still a handful of people that are trying to set themselves up so that when we come out of this, they're able to respond and react. The one thing I would say that we haven't seen is people think all of a sudden, because we've been shut down 5 weeks, that, well, there's going to be steals and deals all over the place. And we've seen people submit those kind of offers, both to lease spaces that are out there and to buy spaces. And my response to that is like, it doesn't happen that quickly. Like landlords, unless they're in a unique, and owners, unless they're in a unique scenario, don't just all of a sudden say, yeah, I'll reduce my price by 20 to 40%. That may happen down the road, pending unique situations.
That's like you were saying earlier. It's a slower, much slower process than that.
Yeah, but it's not like the desperation has set in, at least on some of the stuff that we're working on. So
got it. Well, on the flip side of the coin, this is probably a more obvious answer, but how would you advise those people who've had aspirations to buy commercial real estate in any one of those sectors you mentioned? Considering the environment we're in today, I think you kind of mentioned interest rates and lending programs being still extremely attractive.
Yeah,
but what else?
I don't think interest rates are going anywhere. At least not up enough that it would dissuade you from paying a higher amount today. I think cash is king to be able to respond quickly, right? So if you have the ability to respond quickly, that always bodes well, because it just allows you to move more quickly than others sometimes. So
cash is king. Yeah.
Yep. And again, based on unique investment criteria, there's always opportunity out there. I think there's going to continue to be more opportunities, just given what we're seeing. And the question just becomes kind of the larger perspective of that investor, of what do they really think they can do with that opportunity if the existing opportunity didn't work out. So people sometimes are a lot more creative than me and have ideas. Some seem riskier than others. Some work out, but I think there will be buying opportunities that are attractive to people here coming down this summer. Okay,
awesome. Well, I think that's all we have time for today, but can you tell our listeners, our viewers, how they can get a hold of you, whether you're on the buy side or sell side, kind of what your specialty is, how you help people?
Sure. ElfordRealty.com, but I'm available at 614-582-5521 or A Mills, MILLS, at Elford, ELFORD Realty.com.
Awesome. And like I said, I personally vouch for Andy. He's wonderful, not just a wonderful realtor, wonderful person. I really do appreciate you coming on and doing this with me.
Sure. Adam, appreciate all the information you're putting out there and for the time today.
No, thanks. So for those of you who have ever have the desire to purchase or sell commercial property, you can get a hold of Andy, as he mentioned, and his team at www.elfordrealty.com. Again, Andy, thanks for being here and offering so much valuable information and education. I really appreciate it, and I'm sure that our listeners do as well. All right, that's it for today. We realize that there's thousands of podcasts out there and that you chose to listen to ours, so thank you so much for listening. Be sure to subscribe on iTunes and YouTube. Feel free to share this podcast with your friends. And if you want more education, you can sign up on our website at www.libertaswealth.com to receive our screencast videos and articles that we send out on a regular basis. Again, you can also follow me on Twitter at Adam Koch and on Instagram at Financial Surgeons. So thank you so much again for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koch. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.